So why is it that the government wants these companies dead? I think there's been a current of this forever. Bill Maloney, Fannie's very outspoken former head lobbyist, used to call this the vampire issue, this idea that the two companies shouldn't exist. And Fannie, try as it might, could never totally eradicate this opposition to its very existence. And Fannie's attitude and its formidable political clout developed in part in response to this. To even the most insignificant of threats, Fannie would respond with outsized aggression because it saw the danger lurking behind every bit of criticism. So the company's attitude became, as Bill used to say, "You punch my brother, I'll burn your house down." I think part of the reason has always been this pure ideological opposition to the idea of the government being involved in a major market, or supposedly, purportedly, this free market economy. So why do you need the government in the housing market? Economists in particular view hidden subsidies, this implicit guarantee, this idea that the government stood behind these companies implicitly but not explicitly, and for which the companies did not pay a fee, as a really bad thing. Larry Summers, the former Treasury Secretary, told me this. He said, if you were looking for the absolutely best way to mine money out of the government, it was brilliant design to do just that. I'm not sure if they figured it out or if they just took advantage of the opportunities. I think there was a lot of resentment of Fannie and Freddie. The companies in the 1990s in particular made enormous amounts of money, and their executives got phenomenally rich. And it became viewed in Washington as a place where political operatives, particularly Democratic political operatives, could go to make a fortune with very little business experience. In the 1990s, Fannie and Freddie also were under enormous pressure, like most companies are, to grow their earnings, to show growth in earnings per share to satisfy Wall Street. And so they began to own their own securities on their balance sheet and then make money from the difference between the low cost of funds that finance these securities, courtesy of the implicit backing of the U.S. government, and the rate these securities paid. And it was almost like free money. And Alan Greenspan was so offended by this, he used to call it the big fat gap. There was the way that Fannie in particular threw its weight around. There's a great quote from Dan Mudd, who became Fannie's last real CEO in the years leading up to conservatorship, and he said, "The old political reality was that we always won, we took no prisoners, and we faced little organized political opposition." And there's a great quote I found from a 1990s Washington Post story. It was a congressional source telling the Washington Post, he said, "Fannie has this grandmotherly image, but they will castrate you, decapitate you, tie you up, and throw you in the Potomac. They are absolutely ruthless." Doesn't sound like fun. Anyway, there was also, though, as a part of the dislike of Fannie, there was a real power struggle. And if any of you are super in the weeds about this, I recommend a book called The Mortgage Wars, which was published by Fannie's former CFO, a guy named Tim Howard. You can quibble even violently with some of what he argues, but the opposition to the GSEs was not always pure. It was about control of what has been, at times, the largest fixed income market in the world. It was about money. As many know, all of this sort of nascent opposition sort of accumulated, or maybe coalesced is a better word, in the accounting scandals of the mid-2000s at Fannie and Freddie, both of which in retrospect are really odd. In Freddie's case, the problem was supposedly that they were understating earnings. In Fannie's case, they were supposedly overstating earnings. Their regulator at the time even called them a government-sponsored Enron. This was an enormous scandal, and it led to the ouster of Frank Raines and Tim Howard. If you Google Frank Raines, you'll still see accounting fraud associated with his name. But as David Feider, my friend and who's done an enormous amount of work on the GSEs, has pointed out, when the restatement was completed, Fannie's shareholder equity actually went up by $4.1 billion over the contested period. In 2012, a judge threw the civil claims against Raines and Howard out of court, saying there was no evidence that either of them had ever tried to purposefully deceive anyone. And look, the legal system works in weird ways, but when you have a regulator call their regulatee Enron, you would expect things to end with a bang and a jail sentence, not a whimper and a finding by a judge of no purposeful wrongdoing. Weird, once again. So then came the 2008 financial crisis. I was at a JP Morgan dinner last year, and a bank CEO asked what I was working on, and I said Fannie and Freddie, and he said, "Oh, well, the story there nobody will tell. They are 100% responsible for the financial crisis. We in the private market did absolutely nothing wrong. It is 100% the responsibility of Fannie and Freddie." I was just at a friend's wedding in Des Moines last weekend, and her father works in finance, asked what I was working on. I said Fannie and Freddie. He said, "The hidden story is that they are 100% responsible for the financial crisis." It's like, how can this be a hidden story when everybody seems to think it? Anyway, I could go on, and I actually get it. This narrative about Fannie and Freddie being 100% to blame is really appealing. For one thing, it simplifies the financial crisis, and I think people love simplified. It feels like clarity, even if it's actually only the illusion of clarity. But secondly, it's almost akin to a religious war, because if you can blame the whole financial crisis on government policies gone wrong, well, then the answer is obvious: no more government. And the corollary is that the private market doesn't need to be regulated because it was perfect, but for the presence of the government. Just a little sidebar here. We can have a whole separate conversation about whether regulation makes things better or worse, so don't read this as me sort of blindly siding with the idea that more regulation is better. I'm more trying to sort of explain the religious war behind this. Anyway, but this idea that Fannie and Freddie are to blame just cannot be the whole truth. And there are a lot of ways to think about it, which I try to outline in my book because I think it's a really important issue. But one of the most compelling ways to me to think about it is that this big private lender called New Century was bankrupt before anybody even suspected there were problems at Fannie and Freddie, making it really hard to believe that it was, or argue that it was, a crisis of confidence in government-backed loans that kicked off the entire crisis. And by definition, none of the losses that took down the big banks, and that almost took down the big banks and did take down AIG, came from GSE-backed loans. The GSEs bore responsibility for all of their own loans on their own books. So you think about those two things kind of bookending the crisis, and you think, wait, how does that square? But the damage was done. This narrative has hardened into a political reality, particularly in Washington. You can see it in that even Barney Frank, the former senator from Massachusetts, who was a huge Fannie and Freddie supporter, ran from them and said these two companies should be abolished. No one in Washington would be caught dead supporting the GSEs. They became pariahs. And they weren't, under the terms of conservatorship, able to defend themselves. Unlike anybody else who got a bailout, the GSEs had to fire all of their lobbyists, and their employees are not allowed to speak at conferences, write op-eds, voice anything without approval from their regulator, which is usually withheld. So the narrative has become very, very one-sided. And of course, that's not the only reason people hate the GSEs. If there's one thing that people around the country know about Fannie and Freddie, it's this number: $187 billion. That's the amount that Fannie and Freddie took from taxpayers to be bailed out. The funny thing about that number is that it is a totally made-up number, and I walk through some of the analysis in the book, but it includes a lot of non-cash losses that never actually materialized. So it was a much bigger number. They were forced to take a lot more money than they needed to actually cover cash losses, and it's a really important and, yes, another very weird thing about these two companies. But it certainly makes a good headline. Anyway, on the subject of weirdness, then there's this thing called the Third Amendment, which happened in the summer of 2012 when the government put Fannie and Freddie into conservatorship. They left 20% of the stock outstanding, and this was, in a sense, another elaborate game of let's pretend. The government didn't want to have to put Fannie and Freddie's debt onto its balance sheet, thereby exploding the national debt. So they left this 20% outstanding. At the time, their regulator even said it might have value one day. Jim Lockhart, who was the head of the agency that regulated them, said the goal was to return Fannie and Freddie to normal business operations, and that both the preferred and common shareholders have an economic interest in the companies, and going forward there may be some value in that interest. All seems to make sense, right? But then in the summer of 2012, on a sleepy summer Friday in August, the government abruptly changed the rules of the game. They announced they would take all of Fannie and Freddie's profits going forward, leaving them with almost no capital cushion to weather another downturn. And what the government actually knew at this point in time is the subject of that New York Post article, and has become a subject of huge controversy. Did the government understand that these two companies were about to become mammothly profitable? There's a ton of speculation about why the Third Amendment was actually done. What you can't argue with are its effects on the budget. Thanks to the GSE's profits, federal spending was underreported by a combined $178 billion in 2013 and 2014, according to a paper by the Heritage Foundation. And I think last but not least, a bunch of investors have sued over the Third Amendment as well as other things, and that, ironically enough, provides yet another reason to want Fannie and Freddie dead, because who in today's Washington wants to be responsible for enabling a payday to wealthy investors, whether that's fair or not? So it begs the question, right? If everybody wants them dead, and the political reality in Washington is that they should be dead, Why are they not dead? Why are they so hard to kill? There's a little thought that pops into my brain that they're sort of like Jason from that awful movie series, Friday the 13th. You know, just when you think you're done with it, there's another sequel. I think one answer is that the housing industrial complex is still very strong, and it's been biding its time and waiting in the shadows. But there are at least two other reasons. I think one is a real question about how do you transition to a new system? How actually do you transition? Any move to say the GSEs won't be around would reduce what is the chief element of value in their mortgage-backed securities, which is liquidity. This stuff trades like water. It moves throughout the financial system. It's used as collateral in all sorts of trades. It's almost a substitute for treasuries. If you say these companies aren't going to be around, then you've suddenly said that these securities aren't going to be around forever, and suddenly they become a whole lot less liquid, and suddenly that impacts the trading value of those securities in a major way. That would be a problem for all sorts of domestic markets, and it would be a problem for our foreign relations too, given the extent of this stuff that is held by foreign central banks. There are a lot of other reasons why the transition would be complicated. But another issue I've come to think about is, what do you replace them with if you get rid of Fannie and Freddie? So mortgage credit risk is this really icky, unappealing thing. It always has been. A lot of investors don't want it and aren't allowed by statute to take it. Even in boom times, the biggest boom ever in the run-up to the financial crisis, when no one thought housing prices would ever decline on a national basis, you had to have this tranching system whereby rating agencies would stamp all these tranches with a AAA rating in order for most investors to want to buy it. They did not want credit risk. Of course, they were taking it anyway, even though they didn't think they were, but that's another part of the story. So who controls the mortgage market if you don't have Fannie and Freddie? Well, I think it has to be the big banks. Maybe there's an alternative I don't see to that, and there might be a way to rebut this, but I don't see why having the big banks control this market is in the end preferable to Fannie and Freddie. In the last crisis, it wasn't just Fannie and Freddie that were GSEs. It was the whole banking system, plus AIG. We can have an argument about whether or not the Dodd-Frank financial reform legislation has fixed that, but if the big banks control the mortgage market, I think we can all agree that they will for sure be too big to fail in the next crisis. And nor do I see why having the political power that used to accrue to Fannie and Freddie by virtue of their position in the housing market accrue to the big banks instead is a good thing. I mean, can't you just see a backroom deal being made? If you loosen up mortgage credit for the next year, we'll go light on derivatives legislation. I think it would be far less transparent than the system we've got now, and arguably quite a bit more dangerous. So I'm sort of at this odd place. In my last book, All the Devils Are Here, in the epilogue we wrote that the silver lining was this idea that we would reshape housing policy. I still believe that is the silver lining, and it would require a much broader conversation than Fannie and Freddie. How much do we want to encourage refinancings, particularly cash-out refinancings? Should a house be a credit card? What about the mortgage interest tax deduction? But we're not going to do it anytime soon. I think that's the political reality. If there still is a silver lining, I think it may be that today's younger generations are very different from the home buying populations of the second half of the 1990s. They are far more diverse racially and culturally. They're more urban. They're more mobile. The shape of the housing market is ultimately going to be decided not just by what's available to these generations, but also by the choices they make. But I've really come to believe that in the meantime, we should stabilize the system we've got and put an end to the government's use of Fannie and Freddie's profits as a slush fund. And again, I'm open to arguments. I've been thinking about this topic for over a decade, and I can't tell you how much my views have evolved over the course of the decade, both from thinking about it and talking to people and from events that have transpired. But I've kind of come to believe that the best description of Fannie and Freddie is to roughly paraphrase Winston Churchill, which is that Fannie and Freddie are the worst form of financing home ownership, with the possible exception of everything else that has been or will be suggested. So on that note, I will open it up to whatever questions you all might have.